The Reserve Bank of Australia says it is willing to cut rates further because it's no longer expecting a pickup in wages growth. In today's quarterly statement of monetary policy, the RBA forecasts subdued wages growth of 2.3% until 2021, with wages expected to remain flat. The RBA predicts inflation is also likely to remain low, with no real moves to come for unemployment. The central bank says for this reason it's prepared to ease rates further if needed. However, it did express some hesitancy, the board saying it is aware further cuts could convey an overly negative view of the economic outlook. Joining me now is Adam Dawes, Senior Investment Advisor at Shaw & Partners. Adam, thanks very much for your time. Look, let's start with what the RBA's had to say today. Any market reaction, first of all, to this latest, I guess, they've sort of keep hinting, yes, cut, no cut, and now it's sort of on the table, but not for a while?
Yeah, it's a little bit of a mixed message that the RBA is sending the market as well. The market really didn't react too savagely to the announcement from the RBA at 11:30. We've pretty much kept our sort of the line where the market's been up sort of 4 points and down sort of half a point at the moment. So there's really a little bit of a lacklustre day. We were expecting or hoping that the RBA might give us some direction on the economy. They did see that near-term downside risk to the Aussie economy is going to be housing and construction. They did also note that there is a chance, as you just mentioned, of a 25 basis rate cut by sort of mid-2020. So, you know, those couple of things, a little bit lacklustre for us, Tom. But, you know, I think the market overall has responded quite well to this. The other thing that they did say, and this is what really the market is concerned about, is there's more signs that the US-China trade dispute is starting to spill over into other services or other sectors in our market. And that's certainly something that's really keeping our market on tenterhooks at the moment.
Right, so what are the concerns here? I mean, there was talk that perhaps the latest talk around that very dispute was maybe tariffs not going ahead and even being relaxed, but there are still areas worried. What are they?
Well, the areas that I guess that we're worried about is obviously one, is a deal actually going to happen or not? And we certainly haven't seen anything penned on a piece of paper. And we know that they were supposed to meet in Chile on the 10th and the 11th of November, but that has been cancelled due to the protesters and everything that's going on there. So it really sort of kicks the can down the road a little bit for us on those concerns about those issues. And certainly technology is one of the big issues between China and the US. So there's certainly a couple of things, but certainly spilling over to our market, you know, the resource sector has certainly moved, and that's one of the sectors that has been moving today, is that resource sector, on the back of that. If a deal does go through, then more growth is going to happen in the world, and certainly our iron ore stocks, so something like a BHP, Rio or Fortescue, have been doing very, very well over the last week on the back of perhaps there is a potential deal and risk now starts to come back on. The other sector that's now taking off a little bit taking back a step, is gold. So as risk starts to come on, people start to sell gold because they don't think the world is going to explode and everything's going to be okay. So there's a couple of things that are starting to spill over, but certainly resources, if this trade deal does come through, will be a large benefactor to that US-China trade deal.
Yeah, well, they've been driving another trade surplus for Australia. Look, a pretty good week overall, up 0.85%. You'd take that in any given week. Adam, thank you.